Hello everyone and welcome to another weekly technical video day. Today is October the 29th and it's around 8 p.m. New York time. Guys, the US dollar was sold pretty hard this past week. The selling of the dollar is open a lot of different views when it comes to the dollar index. In other words, the message that we would like to pass for this coming week is that you guys need to have an open mind with the dollar. In other words, we have located three valid counts within the US dollar. When each of the counts is valid and only data and time will let you know in which counts we are. What we're going to try to explain in this video is we're going to try to correlate three pairs or four pairs: S&P, Euro dollar, US dollar index, cable, and in extension the Aussie dollar and the New Zealand dollar. And we try to show you guys what we do believe after seeing the data this past week. Why do we believe and why we recommend you guys to take position. The first recommendation is that for the dollar bulls, you guys need to be careful, and please, you guys understand that you guys do not trade in weekly and daily charts. So don't get so bullish about the dollar because it doesn't look that that's the path that the market is gonna follow. Now, let's start with the US dollar index. The US dollar index can be in three possible scenarios. The first one, we're gonna go from more bullish to less bullish. The first one is that the US dollar index finish sideways from here at the level at 72.40 right here, and this low that comes at 70.69, and then it did 3, and the US dollar index is nesting 1, 2, 1, 2, and it's gonna go higher in a flat. Now that scenario is very shaky at the moment, and I tell you why. Because it took 111 days for the US dollar index to go from 72.40 to 79.83, and in 21 days it has erased the 76.4% of that movement. That's telling me that the index most likely still is in the downtrend channel. I'm sorry, in the downtrend move, not in the uptrend move. But well, it's still valid as far as 72.40 area is in place. That's the first scenario and the most bullish within the index. The second scenario is that the index is in the big wave 4 from the area of 121, when we got 1, 2, and then 3, 4, and then within the 4 we got A, B, C, D, E, and it's gonna bust lower, and then it comes the three-way move in favor of the index. What do we like about this scenario is this, that if we're taking this subdivision, we're gonna see that the low on wave 3 right there is the 1.618. We're gonna see that this move is to the 3802, and we're gonna see that this low right there is the 1.618 in Bex Fibo of the previous 4. Now, also, we're gonna see that this move right there is the 3802. Now, this looks like it's gonna be our favor count for now. Now, this is the second scenario, which is gonna come with more sideways before dollar index, and then the recovery that everyone is expecting. The third scenario is that the US dollar is into an ending diagonal, when we have the same two here, and then we have 1, 2, 3, 4, and 5 before the recovery in the dollar. Those are the three scenarios that we really see within the US dollar index at this moment. Which one we favoring? I would say that we need to favor the diagonal, in other words. Or, I mean, any of the three that valid. You need to wait for data for invalidation. Otherwise, you're guessing. All right? At the end, it's the same result, US dollar strength. But that can take months before that happens. Now, let's move on to the euro now. On the euro, we're going to start with this scenario. This scenario is the most bearish on the euro. This is the one that goes with the nest within the US dollar. We have wave 1 ending here, and then we got A and a triangle B wave. What we have is A, B, C, D, and we're going higher to 45.29 before lower to 114 in a trough for the B wave triangle. This scenario goes pretty well with the nest and the dollar, and this scenario goes pretty well with cable. So you have to keep this one as a favor as of right now on the euro dollar. Now, what else we can see within the euro dollar? We have the second scenario. The second scenario is the one that goes with the diagonal in the euro. When we have A, B, C, three-way, this can be W of A, B, C. Three ways, this can be S or V, and then the Z way can be either a 5-way or a 3-way move. In this scenario, when the US dollar makes a new low with a diagonal, it's going to test the highs around 160. In other words, it's going to test an area between 151, 153 area before dropping in 3-way to around 114. And then the third scenario is this one on the euro dollar. Is the one that it comes that this is A and we are in a B-way triangle. This scenario is very valuable, and this is an scenario for all you guys that want to know about it. Why we keep mentioning this scenario is the one that comes from the all-time lows in the euro when you got A, B, C, W, S, A, triangle B, and then you have in a triangle B, and this scenario go with the B wave 4 in the US dollar. Why? Because this triangle is only entering the C wave of B, and then like the dollar need more sideway. And then the trough in the triangle right here is going to be the trough in the wave 4 within the dollar. And then the 3 ways back here is going to be the 3 ways higher in the dollar. So technically, this scenario right here, you can consider it like a very viable scenario. Don't get caught in the short dollar trade, the euro trade. This is very possible within the euro dollar. I've been mentioning, you guys need to understand, without bias, this is a very possible scenario, and you guys never gonna see for a while the euro before 118, because this scenario is a bullish triangle that is gonna take the euro about 160, that and the dollar below 68 before a recovery in the dollar. That's what you see for the dollar and the euro. Now, let's move on to some individual pairs. Let's start with cable. Cable keep saying that a B-way triangle that, like I say, it goes with a nest and it goes with a B-way triangle, a small B-way triangle in the euro dollar. Let's see, as far as this trend line hold, you should favor those counts within the euro dollar and within the euro. Now, another pair that is very interesting is the Aussie. The Aussie, you can see Aussie two ways. This way is the one that goes with the euro, with the dollar making another low in a diagonal, when you have 1, 2, 1, 2, 3, 4, 5, and a new high, or you can have the alternative, which is that this 5 goes right here, this 3 goes right here, and then all you got right here is nothing more that this is 5 A, B, C, W, and this goes with the cable triangle. So you can see all the weekly and the daily chart, you can count it different ways. So that's going to be the message that we like to guys to understand. And finally, let's take a look at the S&P. S&P, again, two ways. Either you got the 5 swings, and this is the top, and then you're going to get around 1312, 1340, the end of 2, and the S&P is going to trade lower. Or you got this alternative scenario when in the S&P you can get A, B, C, a B way, A, B, and the S&P is going to test about 1370, something around 1400, an extension 1500, and then from there it's going to drop. As you guys see, I mean, there is nothing clear in the long time chart. There is nothing that say that you guys should be dollar bullish. There is nothing that say that you guys should be dollar bearish. My advice, play the 4 hour or less, and you're going to be very successful at holding a bias. For next week, we believe that the dollar is going to keep going lower on to finish the cycle that started, and the cycle that started last week, the same with the euro. So, for example, in the dollar case, this is what we mean, guys. Don't worry about the long time chart. We presenting it because we want you guys to understand the real meaning of trading. There is nothing that say that the US dollar is going to get strong from current levels. Nothing. But at the end, it looks like it's going to happen. But my message is, and this is very clear, look at the US dollar in the 4 hour chart. 1, 2, 1, 2, 3, 4, 5, 3, 4, and an A, B, 1, 2, and going lower. The US dollar is going to look for a number minimum around, I would say, around 74.10 as a minimum target. We believe that we are still within the wave 3 that should end possible around 74.30, should end the wave 3, and then a 4 and a 5 to either 74.10 or 73.80. That's the message that we want to send. Also, we would like to mention the oil trade. If you take a look at the oil, looks like also like oil is either 1, 2, 3, 4, 5, looking for 97.40, or oil, it has 1, 2, 1, 2, nesting to go even higher. So what you have in oil, a 5, a 3, and a 5. So you got 3 ways so far. As of right now, you don't get divergency in oil yet. The high is the high. You can see that in the first cycle, you got a small divergency right here on the high. So this is a 5-way move. You have to let the market determine which way you are before you take sides. Again, my advice, trade the small time frame charge and don't get into a long bias trade because they can be very dangerous. All right? For the week, we're expecting resume until the proof you're wrong. Thank you.